Well, we are learning provision for bad and doubtful debts, and so far we have learned a lot on it. We have discussed how to account for bad debts, how to account for provision for doubtful debts, how to measure these provision balances, and how to account for increase or decrease in the provision for doubtful debt balance, and how these are presented in the balance sheet by subtracting from the closing balance of debtors, and how the bad debt expense is presented in the income statement. Now, we will do little more practice to strengthen our concept on this topic. So we will discuss few scenarios in which we will practice all these things to concrete this knowledge. And the scenario is that we have debtors balance in our trial balance, debit side, 25,000, and in the trial balance, the bad debts account, which is already written off during the year, is rupees 1,000. It is appearing in the debit side of the trial balance. And then in the credit side of the trial balance, provision for doubtful debt, the opening balance brought forward is 480. And there is a scenario to write off further bad debts of 500 and to maintain or increase provision for doubtful debts up to 400. Remember, we have opening balance of provision with us, which is 480. And we have to maintain it up to 600. Okay? And the second scenario is that write off further bad debts, 500. The same thing is repeating. But this time, you have to maintain or decrease provision for doubtful debts at or up to 400. Remember, sometimes examiner or the book uses different terminologies. So don't get confused with up to or at or by. Just see what is the concept behind. Here, the concept is we have to maintain. Either you will read it, maintain provision for doubtful debts at 600 or up to 600. Okay? So, means the same. That from 480 you have to go to 600, or from 480 you have to go to 400. So learn the concept. Don't go behind the words that are being used in the question. So scenario 3 is that write off further bad debts 500, the same thing, and increase provision for doubtful debt by 200. Okay, it's saying that you already have this provision with you, which should now be increased with this amount so that the balance of provision would be 680. This is how you will interpret this. Okay? Well, let's see how to solve this scenario. First of all, scenario number 1, in which we have to write off further bad debts 500 and to maintain provision up to 600. Well, so just see, debtors from trial balance we have 25,000. Here we go. And 500 are further bad debts. This further bad debts. Okay. This 1,000 has already been taken into debtors account since it is appearing in the trial balance. Okay. So further accounting entry will not be passed for this 1,000. Rather, that 1,000 would be appearing in the bad debts account coming from the trial balance, and this 500 will be debited because of further bad debt in the bad debts account. Now, the next thing is that in the trial balance, we have 480 opening balance of provision. This 480 opening balance of provision will come in the credit side of provision for doubtful debt account. And now we have to maintain it equal to 600. Means closing balance should be 600. So there is an increase of 120 in this provision for doubtful debt. That increase will be debited to the bad debts account and will be credited to the provision for doubtful debts account. So this is its accounting. For scenario 2, again, the opening balance is 25,000. Further bad debts are 500. Here we go. Further bad debts are 500. Already we had a balance of bad debts appearing in the trial balance equal to 1,000. Well, closing balance of debtors that will be taken to profit, that would be taken to the balance sheet is 24,500. And this provision is to be reduced or maintained to 400, means there is a decrease of 80. So this 80 will be giving an effect in the credit side of the bad debts account. We have already discussed their accounting entries, so I'm not repeating those. So anyways, just see the movement of amounts within the accounts. Well, so now we have carry forward balance of provision which will be subtracted from this carry forward balance of accounts receivable or debtors. And this 1420, how it is calculated? Add these two, 1500 minus 80, you get 1420. This 1420 will be taken to profit or loss account or the income statement. Very well. And in scenario 3, again, we have opening balance of 25,000, which we are reopening. In fact, coming from the trial balance, it will be put in the debit side of the debtors account. And this 500 is the further amount of bad debt. So credit debtors account, which will be leaving a carry forward balance of debtors account 24,500. That will be taken to the balance sheet. And this provision of 480 is to be increased by 200 so that it will become 680. Okay. Well, now this 680 is the carry forward balance of the provision account. So this increase of 200, same accounting entry that we have already learned in our earlier modules, that whenever there is increase in provision, debit bad debts and credit provision. So we have carry forward balance of debtors 24,500, carry forward balance of provision 680. Both these will go to the balance sheet. This will be subtracted from 24,500, and income statement will be showing us a bad debt expense of 1,700. So this is how we do accounting for increase or decrease in the provision for doubtful debt account, and this is how bad debt account is affected because of the increase or decrease in the provision for doubtful debts. So the important tips to remember in this module are that bad debts appearing in trial balance already been recorded. We have to pass accounting entry for further bad debts to be written off. Okay? And don't confuse because of different words. Just focus on the movement in provision, that is increase or decrease. Mostly students cram that if there will be a word to, we will do this. If there's a word at, we will do this. If there's a word by, we will do this. Okay? Don't go with these concepts. Just see what this sentence is telling us. Because of this statement, there will be increase or decrease in the balance that we have already in the trial balance for provision for doubtful debts. So such increase and decrease you will simply account for in the bad debts account and in the provision for doubtful debt account. Clear? Thank you.